number one, any government in the world is looking to produce growth for its population economically. Chinese growth has moderated recently. There's been comparisons about, is China going the way of Japan? Is this peak China? What is the Chinese plan for continuing the economic growth that we've seen over the last 3 decades? And what is the biggest challenge to that happening?
Yeah, I think definitely we're seeing economic slowdown in the past decade or so. I think one of the major reasons is that the total factor productivity goals has declined. China basically accomplished industrialization process back in 2010. So manufacturing sector actually share of GDP is declining. So when you have a large manufacturing sector, when you have mass production opportunities, it's easy to have faster growth. But right now, I think the service sector is accounting for more than 56, almost 57% of GDP. And when your service sector dominates, the growth rate will tend to decline a little bit. I think we have observed this trend in US, in most of the industrialized economies in the past. I think right now China is getting into that phase. So I think to boost economic growth, basically you have to rely on TFP growth. TFP basically means total factor productivity growth. I think right now the growth rate of TFP in China has been somewhere around 1.5% to 1.8%.
Can I just stop you? So TFP, total factor productivity. So when you move a farmer into a factory and you give them a new piece of equipment, that increases productivity very quickly.
Yeah.
But if they're a DD driver, it's very hard to increase their productivity.
Yeah, if it's a labor-intensive sectors, it's really hard to improve labor productivity or total factor productivity. That's correct. Yes. So right now, China, I think TFP growth rate has been declined to somewhere around 1.5, 1.8%, and typically, I think TFP growth rate accounted for about 40% of GDP growth. So if you have a 2% of TFP growth rate, basically you can maintain 5% of GDP growth rate. That is more or less the rule of thumb. So in China's case, it's very important to further boost TFP growth rate from current 1.5% per year to 2% per year. So this is how this new term, new quality productive force, is coined, because the essential nature of new quality productive force is to boost TFP growth rate.
But does that mean that the future of China's economy still has to be very largely based on manufacturing? Does that mean manufacturing still has to be the core?
No, I don't. I think if you have a large manufacturing sector, it's going to help. I think if you compare China with US, right now, I think manufacturing sector only accounts for less than 10% of US economy. But in China, this number is 26, 27%. So I think that definitely is a plus. But I think the TFP growth rate comes from different sources. So number one, technological progress. So if you have scientific or technological driven innovation, which can convert into new industries, future industries, that can bring some growth on TFP. I think the other source is the improvement of allocation efficiency. So China, you have a lot of areas, strategic industries, in which, because of institutional distortions, what kind of reasons, I think the TFP growth rate has been constrained to a certain extent. So if you unleash those potential, you can still improve TFP growth. So you don't have to rely on a very large, oversized manufacturing sector. That is a plus, but not necessary. Yeah.
When you say misallocation and distortions, are you saying there are some areas of the economy where regulation is suppressing productivity growth?
Yeah, sure. I think in many areas. I can give you 2 examples. Number one, agriculture, right? I think agriculture actually right now in China only accounts for 7% of GDP. But if you look at the labor force, I think more than 22% of labor force are in agriculture sector. So that is a sign of poor productivity. Why you have such situation? I think you have to think about the land system, and also the rural immigrants. It's really hard for them to fully settle down in the cities. So you have hukou system. I think those distortions have to be removed in coming years, and that will help facilitate the productivity growth in agriculture sector. I think another example is the finance sector. Yeah. So financial services is very expensive in China due to all kinds of reasons. So if you open up competition in those areas, I think that will improve the allocative efficiency. That can also help improve productivity growth. Yeah.
So over the next 5 years,
yeah.
Your expectation would be for deregulation, reform in areas such as hukou, internal migration, in financial services, anywhere else?
I think those reform measures have been laid out in the third plenary session of the 20th Party Congress last year, last July. And yes, you're right. Supposedly they should be complete by 2029, before the end of the 15th five-year plan. So we'll see. Yeah, I think that could be launched gradually. Yeah, one by one. Yeah.
The other part of that for increasing productivity is technological innovation. What does the government do to increase the possibility of technological innovation? How does the government feel that?
Yeah, so I think this is why I think the sentiments about the Chinese economy all of a sudden have changed a bit this year because of two things, right? Number one, I think DeepSeek. I went to US in March. I talked to a lot of economists and also people working in the think tanks. Everybody's talking about DeepSeek. So I think that is a sign which showing that the foundation of Chinese economy actually is shifting. So I think AI and the big data-driven transformation is going to become one of the major parts of economic growth going forward. And the government has been, I think, promoting that. So in China, you're talking about the digital transformation everywhere. You're talking about the digital economy everywhere. Even in our schools, right, we have the new major, the management economics of digital economy. I think the demand for talents in those areas is huge. So I think that is something China is hoping for, because you can argue that AI and big data, they are general purpose technology. So they have a huge number of application scenarios. So if they can be applied and they can change current industries, or can somehow create some new industries, that is going to be a big boost for TRP growth going forward. I think that is one story. Another story I think people have talked about is climate change. People just argue that climate change actually is a constraint, but I think it's also about investment. For example, we have this estimation, if China, the whole world wants to achieve zero net emission by 2050, I think beginning 2030, the total investment per year for that purpose is going to be somewhere around $10 trillion US. $10 trillion US.
$10 trillion US a year.
In China's case, I think, because China actually has 30% of greenhouse gas emissions. So if we argue that China is going to shoulder 30% of such investment, it's going to be $3 trillion US, okay, which is 22 trillion RMB per year. And that is going to become a major drive of your mass production opportunity scenarios, and also technological progress, and also big boost for TRP growth.
How quickly do you think China will get to a point where it's investing $3 trillion US a year in the energy transition?
I think right now, in terms of the allocation of resources in the area associated with climate change, China has done a lot. You talk about EV, right? That's one example. And talk about the new energies. I think China has done a lot of investment. So I think going forward, I think further opportunities will come up, and the government has very carefully drafted plan
Yeah.
to ensure that the investment will be there. Yeah.
So how does the trade relationship between the United States and China fit into this picture?
So I think probably this is my personal view. It's basically different from a lot of economists' perspective on this issue. I don't think it's a trade issue. I think it's a competition on TFP growth rate.
Okay.
As I said, in China's case, the TFP growth rate has been declined from 4% per year to 1.5% per year. But in US, I think right now is only like 0.7%.
0.7.
Less than 1%. The reason is very simple. You do not have mass production scenarios in the US anymore. Manufacturing sector only accounted for, I think last year it was 9.98% of GDP. So this is why I think this is the whole idea of MAGA is about.
MAGA.
MAGA,
Yeah.
whatever, yeah. You want to have manufacturing sector back to US. This is why J.D. Vance, in my understanding, was picked as the vice president.
Yeah.
Because there is a book about the Rusty Belt situation in the US. This is why President Trump actually, several days after he took office, he announced this huge project, Stargate, which cost $500 billion US. It's all about investment. It's all about TFP goals. You need investment to boost TFP growth rate. So I think this goes back to the reciprocal tariff, right? I think that the Secretary Scott Bessent says that U.S. is going to win the war because they have market.
Yeah.
They want to achieve market decoupling. So this is why I think it's all about having manufacturing back to U.S. and it's all about TFP goals, competition. Yeah.
Do you think there's, if it's not about trade and it's about getting manufacturing back into the United States and getting investment into the United States, is there a role for China in doing that? Is that something that, could China build factories, invest in the US? Is that something you think would?
I think manufacturing is just one source. I said one source of TFP goals going forward. US needs to work hard, think hard about the potential source of future economic growth. I think investment in manufacturing sector, having a massive amount of investment in certain area, for example, AI, computing power whatsoever, that is one choice. In China's case, I think we're working on the same thing, right? Because we're also facing declining TFP growth. So this is why we emphasize digital economy. We emphasize carbon neutrality. We talk about investment in public services, investment in human capital. We'll talk about those things. We hope that by making a larger amount of investment going forward, China can still maintain a moderate rate of TFP goals.
Yeah.
And eventually, the 5% or maybe slightly below that can be achieved in the coming years.
So if what the US wants is manufacturing back in the United States, what does China want out of a deal? Is it mostly about technology or is it also about access, market access?
I cannot say that the US wants to have manufacturing back because it's almost impossible.
Okay.
I want to say that they want to find a way to shorten the gap between the growth rate of TFP between China and the US.
Okay.
So you have two ways to do that. One, increase our own TFP goals. The other way, contain the other side's TFP goals. So I think they're using both right now. It's a mixed strategy. Yeah.
So what does China want out of a deal?
China wants to boost the TFP goals. So China wants to emphasize scientific research and the technological progress. And China wants to maintain large-scale investment opportunities. So this is why China is very keen on green development, digital transformation, new infrastructure investment, etc. Yeah.
So we just have about 2 minutes left.
Yeah.
Do you see a way forward in which the United States, the relationship between these two countries becomes more constructive as opposed to competitive? Or do you think there's not much to change in that relationship?
But this is actually, I think, a very weird situation right now. Unless I think the U.S. is accepting one of the facts that China is catching up on almost every aspect. You have to, find a peace with rising power, which has different culture, different value with you. So before you learn how to accept that, I think the competition probably will escalate on certain front. Yeah. On the TFP front, on economic front, I would say that. In terms of politics, I don't know. I don't want to be comment on that.
But that sounds like you're saying it'll get worse before it gets better. And it would suggest you're not that optimistic about the near term. Is that?
I use a term, I think the word is getting into fragmented. The idea is that you can see that the second largest power is quickly catching up.
Yeah.
So I think right now China's GDP is 2/3 of US GDP. And people argue that when number one, number two are close, they tend to have very subtle sentiments between them. They want to compete, they want to do something to contain the other side. I think this situation will probably last for about 2 or 3 decades. China likely will catch up with US on total size by 2040. And you give China, maybe takes another 15 years for US to become 2/3 of Chinese size. So, that will be like 2055, 56.
Okay.
So which means that the situation will last for 30 years. So we really need some smart person, politician, to figure out how to build up a new governance, system, given that situation.